Hey everybody, Economic Ninja here. I hope you're doing well. We're going to talk about something wild. The SEC is probing into a company based on mortgage-backed securities. I believe you're going to see this turn into something really nice, really big. And I'm not specifically saying it's going to get big with this one company, but I think where there's smoke, there's fire. I've told you about CMBS, commercial mortgage-backed securities, how bad they are. I was the first person on the internet to talk about this and warn people about it about 2 years ago. Now we are in a position where that is taking down a bunch of banks. Now we're going to start talking about mortgage-backed securities. All right, here we go. Let's start here. This is out of the Washington Post. There's a lot of news cover. Oh, really quick, sorry. For everybody who has a real estate crash course, I put up a new a new lesson last week. We have another new lesson coming out this next week. So be looking for that. And also to the 2 subscribers that emailed me, I messed up the dates, the codes for that discount link. So I re-put a few more on there. So they're down below. So hopefully you get them. And I got the dates fixed. Sorry about that. It's 80% off. It makes $199. If it doesn't say $199, the sale's over. So just letting you guys know. Here we go. Check this out. Out of the Washington Post, SEC probes major lender over mortgage-backed securities sold to Wall Street. Now, before I get into this, economic opportunity zones. How many people are familiar with them? Type 1 if you know what an economic opportunity zone is. It is a tax advantage. It is a place in a city. It's one of the, I don't know if I've covered it in the course or not. I'll go really in depth in it. It's a really neat way to enjoy some really awesome tax advantages and putting more money in your pocket as a real estate investor. These economic opportunity zones are rundown places. They're places that cities want to revitalize, renew, refresh, whatever. And so what they do is they lure investors like myself to come in and invest and put money into these areas to get them going again. All right. So let's think about this in the back of your mind as we're doing this. Here we go. We're talking about mortgage-backed securities. We're going to talk about the Change Company. First off, let me go over what the Change Company is, because this is the company that's being probed, and they are denying that they know of anything that's going on. So here we go. They have 750 employees. It says the Change Company strives to level the playing field for Black, Latino, and underserved communities by helping bring social and racial equity to banking. We empower diverse small businesses, entrepreneurs, and empower homeowners to pursue their dreams by expanding. That's their explanation of themselves, okay? I'm gonna go into these stories, each of them, but I'm gonna read this now. This was a month ago. This story came out, and then we're gonna go into the one that I read earlier. This is out of housingwire.com. Ex-chief of staff accuses the Change Company for miscategorizing loans. Adam Levine said the non-bank lender made false representations on borrowers' race, ethnicity, and income level. There can be very widespread ramifications if this is found to be true. Because what it will do is, if this is found to be true in this one company, right, it's going to open up all the other companies to scrutiny, especially if attorneys get a hold of this and they go, I smell money. And what will that do to the industry? That's going to start to panic the industry. All right. We already have other things in panic mode right now. Commercial mortgage-backed securities being one. Can you imagine bringing back the resurgence of mortgage-backed securities? How many people, type 2, were affected by the mortgage-backed securities debacle of 2008? Pretty much every single person watching this, right? It dove us into a deep recession. Why? Because the banks lied. Now you've got, this is about a non-bank. All right, here we go. A former high-ranking employee at non-bank, the Change Company, CDFI, filed a lawsuit in California accusing the company of retaliation after he notified executives of employees, quote unquote, miscategorizing loans to apparently skirt federal reporting requirements. The lawsuit filed in Orange County alleges that Adam Levine, the chief of staff to CEO Steve Sugarman, began reporting illegal activity by the company's employees in February of 2023 to Sugarman and other executives and board members. However, rather than investigating the complaints, the company's leadership terminated Levine, he said. If anybody's got any information on this, get a hold of me. A representative for the change company and Levine's attorney did not return requests for the comment. Now remember, this article is a month old, so we're going to show you the progression of this and where this may go. Levine, who was an assistant White House press secretary under George W. Bush and a vice president at Goldman Sachs before starting at the lender in 2021. Wait, okay, let me stop there and tell you, this isn't just a whistleblower. This is a person that has quite a resume and can shake things up, but also on top of that, knows the ramifications of what he's doing. He has been big in the public and private sector, a vice president for Goldman Sachs, and worked as an assistant White House press secretary to George Bush. Think about this. Then he goes to work for a non-bank lender and is fired when he's brought this information. Okay, all of this is allegedly, right? I want, where there's smoke, there's fire. And people at that caliber, at that level, don't turn around and start blowing whistles like that if they're not legit. And I have a feeling you're about to see MBS 2.0. Now, will it happen tomorrow? No. But again, we're going to get into, this story's a month old, and we're going to get into what's happening right now with the SEC. It says, the list includes potential irregularities regarding the community development financial institutions regulations, specifically a rule requiring lenders to provide annual documentation attesting that 60% of their loans go to target markets certified by the U.S. Department of Treasury. So let me reread that. And if you're not getting ready for this real estate crash, I'm telling you, you're going to be bummed. And this is going to take years to flush out. But when it does, and these homes hit their bottom because of the mass liquidation, the mass selling, the panic in Wall Street, and you're not ready, you're going to be bummed out. Let's go over this just one more time again. Think about this. This is how everything blows up in the world. How the books open up and the truth gets revealed. It always starts with something small, but this is not small. This says the list includes potential irregularities regarding the community development financial institutions regulations. So if this company is found to have been miscategorizing and there's a problem there, then they're going to dive into these regulations and they're going to start to hold other banks accountable. They're going to start, or non-banks and banks, they're going to start to turn around and go, okay, all right, you know what? We got to do an audit of every one of you guys. And that's going to show a lot of ugly stuff. All right. Plaintiff has documented that TCC falsifies information on its annual certification by miscategorizing its loans. This includes miscategorizing the race, ethnicity, and income level of borrowers. Attorneys for Levine wrote in a lawsuit. It's interesting. Almost sounds like liar loans. Remember? You could get no income verification. Oh, wait, you could do that again. Remember everyone said, oh, it's going to be different in 2008, Ninja. Back then they were doing interest only. They were doing liar loans. They were doing adjustable rate mortgages. They were doing home equity lines like crazy. Well, wait, they're doing all of those right now except for interest only. That's the last key. So you've got all of those bad loans. No income verification right now. Right now for self-employed people, it's happening right now. Oh, you don't have a down payment? You can't scrape up 3%? We'll give you, what about 1%? There, it's all coming back, but it's even worse. Now they're having to go to 40-year mortgages. An FHA, Fannie Mae, Freddie Mac, insured 40-year mortgage. This is going to be, it's not going to be like 2008. It's going to be worse than 2008, but it doesn't happen overnight. That's why we're documenting this collapse as it happens, to give you the confidence and the faith in yourself to be able to get ready for it. And then you're going to be able to be wealthier than you ever have been. I don't want to see the banks get all this money. I want to see you get the money. All right. So you've got a high-ranking official right here, not only in Goldman Sachs, ex-vice president, but assistant press secretary to George Bush, blowing the whistle that he was fired because he blew the whistle on some dirty things going on. It says here, the lawsuit cites potential securities fraud when investors are induced to purchase the lender's loans in the secondary market based on the false representations on the borrower's profiles. Sound familiar? Sounds just like what was happening in 2008. Investors looking to support low-income families would not purchase the lender's loans if they knew they were provided to wealthy individuals or celebrities, the lawsuit states. That sounds like an FTX disaster. In its seventh securitization on June 14th, the Change Company attracted 16 investors to a $306 million offering, including money managers, banks, insurance companies, and private funds. The loans in a pool had a weighted average FICO of 740, loan to value of 71.1%, 43 months of reserves, and an 8.72% note rate, the lender says. That sounds too good to be true. So that would probably be rated as AAA, right? That's stellar stuff. Huge reserves, killer note rate, 8.72%. That doesn't make sense though. Think about this. Other allegations made by Levine include after-hour parties at the lender's premises and recordings of private conversations at the company's Pacific Palisades office. The accusations include Steven Sugarman and his older brother, Jason Sugarman. I'm gonna ask you to please share this video wherever you can, because I'm gonna tell you right now, you're hearing this first. These news stories are very quiet. They're put out in a way that does not cause traumatic effect in the markets. Being in social media for the last 3 years, I know exactly when to put out a video for its biggest impact and when to put out a video for its least. Mainstream media does this all the time. And you are going to see this get bigger. I'm gonna be honest with you, I'm giddy and excited because I wanna bring you this information as it keeps going and coming and being the first. My goal is to always be the first. I wanna outwork everyone I can, bring you the best information so you can make the most informed decisions, right? And I believe you're gonna see this be just insane in the next year. We could go over that more later, the housing wire stuff, but check this out. Let's move now to what just happened yesterday. Out of the Washington Post, the SEC probes major lender over mortgage-backed securities sold to Wall Street. It says the U.S. Securities and Exchange Commission is probing the Change Company, a California lender that pledges to promote homeownership in underserved communities, over its mortgage-backed securities, according to people with direct knowledge of the matter. We already know who that is. It was divulged. It's Adam Levine. As part of the investigation, the regulator is also looking into some of the actions of its chief executive officer, Steven Sugarman, said the people who asked not to be identified, discussing the investigation that hasn't been made public. Interesting. So we're at the point where right now the SEC has not even come out and say, okay, we're investigating them. They're probing, they're asking questions, which is good. They need to. They've got somebody that's a whistleblower saying, you need to look at this, check this out. And they're gonna find something. And I'm just telling you because I don't think that someone of that level of stature is gonna just blow smoke up someone's skirt. Says buyers of instruments backed by the Change Company's loans have included some of Wall Street's largest money managers. As part of the investigation, the regulator is also looking into some of the actions of its chief executive officer, Steven Sugarman. Oh, sorry, I messed up my thing. The SEC hasn't accused anyone of wrongdoing in the matter, and whose investigations don't always lead to enforcement actions declined to comment. Over the past few years, the Change Company has grown to be one of the U.S.'s most active community development financial institutions, or CDFIs. That tag from the Treasury Department can let firms that work bolster historically neglected communities and get special tax and financing support. The lender says it has funded more than $20 billion in loans to more than 50,000 families as part of its mission to level the playing field for diverse homeowners and small business owners. It says the Change Company's mortgage-backed securities can be particularly attractive to socially minded investors as well as banks, subject to the Communities Reinvestment Act, which requires firms to help provide financing to underserved communities. In June, a government list of certified CDFIs included 2 change entities, Change Lending LLC and the Change Company CDFI LLC. An updated list published this month only includes the latter. Representatives for the U.S. Treasury Department and firm declined to comment on whether Change Lending had lost its status. Barron's first reported the change. With assistance from David Shear, Noah Brahir, Christopher Condon, and Celia Bish. Okay, that's who wrote this story. The point being is this: where there's smoke, there's fire. And we've seen many times before where securities are bundled up and they are misrepresented. And what we saw that happened back in 2008 was these bundles of mortgage-backed securities were salted on top with really good credit scores. But if you looked at all of these loans that were bundled up, securitized, and sold into pension funds, into hedge funds bought them, what happened was they found that only the stuff on top that you could see was AAA or AA rated, right? Everything underneath was total crap. These were mortgages that people could not pay, and they knew it. Now think about what's happening in the mortgage industry just in the last year and a half alone. So many people have been fooled, and actually there's a lot of people that have been fooled into paying much higher rates, and they can't make their loans now. We are seeing so many banks holding shadow inventory and prolonging this. I've spoke with attorneys that are personally working on, negotiating 40-year mortgages for people with the banks because they're losing their house. The banks are trying right now. There's like 800,000 mortgages right now that you could pick up as almost like a sub-2 deal where you literally walk into the bank and say, I'm going to take it over and bring it current. And that should show you something. But I think you're going to see this is just the head of the storm, or the eye of the storm, and we're about to get smacked with the backside of that, right up the backside of our heads if we're not ready. So thank you so much for watching. I'm going to put more of those discount links below. Once they're done, they're done. If the course is not $199, that means it's not 80% off. So to the people that emailed me, I told you I'd make it right. So there you go. When they're gone, they're gone. All right. With that being said, the Economic Ninja is out.